Hello and welcome to a video about VAI Vaiot. So it is first of all we take a look at the daily chart. If you look at the logarithmic chart, you see a not very attractive looking chart. The reason is that it came down in 5 waves. As I often say, a chart that is in a lifetime downtrend, I would not really be convinced. I'm not convinced about it. Yeah, and it is. If you invest in these coins or assets, you're basically working against the higher level trend. Now, that doesn't mean they are necessarily bearish or they couldn't make a new all-time high, but from a structural point of view, these assets have not proven that they are in an uptrend. They are basically haven't proven themselves, and it just bears the risk when you buy and invest in these that they will just continue to drop. Just imagine you invest in something that is on the weekly chart in a downtrend. When you buy, you merely would be hoping that they will, or that it will go into an uptrend. So you might be aware that I bought some VAI early in January. I think the price was below where it is today. However, the reason I did it is to participate in the hype, and I limited my risk by just choosing a smaller position size. If this gets into an uptrend, or if we get a larger setback, I might scale up again. Yeah, but for now, this is just a risky one. Just be aware of it, okay? Also, because if you look at this chart, and this is the logarithmic chart, you can basically draw a trend line here, yeah, connecting all these swing highs, and we basically bounced off it very recently. I think we didn't touch it exactly, but we came very close. So it basically was here at 32 cents. We came all the way up to 27, and we now see a rejection. So we haven't broken above this descending trend line. I think that's just an important observation to indicate we haven't really broken out of the range, and we are clearly still in a downtrend. You can see that here. Yeah, even if it makes some attempts to the upside, but it did that here as well and made a new low afterwards. So there's a risk that this turns into a downtrend. Yeah, but at the moment, I see no indication that the local downtrend that has just started here as well. So long-term downtrend, and we have, okay, you could say maybe a medium-term uptrend, but now we've got a short-term downtrend again, and that might drag it all down again. So we're going to take a look at that also from an Elliott wave point of view. Where are important resistance levels? So structurally, maybe we start with that first. Structurally, you have here these previous swing highs. They are basically at around 31, 32 cents. This is where it needs to get above. Okay, just on the linear chart, but we just saw on the log chart as well, that is exactly where the trend line on the log chart is running. Now we don't need to look at an Elliott wave count on the way down. It's pointless because it doesn't give you any benefit other than to say that we moved down in 5 waves. So what it now needs to do, it needs to create a 5-wave move to the upside. At the moment, I can really only see a 3-wave move. Now you might want to argue maybe it's 5. No, it's not. I can't see 5. So what I can see is here a possible wave 1, a possible wave 2. You could say, okay, maybe this was here a 3rd wave. Then this would be a 4th, and then here the 5th. But the 5th wave itself has only 3 waves, so it's not complete. Okay. So I don't have a complete 5-wave structure to the upside. Even here, I mean, I'm not entirely happy about the structure here. If I make that to the 4-hour chart, because if I'm counting here the 3rd wave to the upside, then I have a 1, 2, 3, a very short 4, and a 5 with a very short wave 5. So what I would not rule out completely is that we've got something like this. And that would be the bullish interpretation, yeah? That this was actually the 4th wave. And the 5th wave moved then to the upside from here. And then I could argue, okay, let me just think. This 3rd wave was finished here. 4 and 5. But then we would now need to see a 4th wave, yeah? This would then mean we are possibly now in a 4th wave. And if we are now in a 4th wave, then it should at least hold the 50% Fibonacci retracement. So which level would that be? draw the fibs. We've broken that, you see? So that's a bit of a concern. That's a bit of a problem. Actually, I prefer this count, to be honest. Maybe I'll go with this one. Let's take the other one out. I prefer the subwave count of this one. So we have a 1, 2, and then a 3. Basically an ABC structure to the upside. Can you see that? You have an A wave here, a B wave, and then 5 waves in C. It's an expanding diagonal here as well, or you could say an expanding wedge, which is not a great pattern. See that? And this broke to the downside. And it tend to get targets of these to hit the beginning of the wedges. Okay, so just be aware of that. There will be temporary support in this area, so I would be watching that, and we talk about what that is in a minute. But for now, based on this wave count, I really only have 3 waves to the upside, which isn't great. Yeah. So if I want to count it as an impulse, this has clearly failed. So it's either new lows, yeah, because then it would be an ABC structure to the upside and new lows. If I wanted to count it bullish now, I would have to find a way to make it work as a diagonal pattern. How could I count it as a diagonal? Right, I could say in a diagonal, each of the subwaves has 3 waves. So I could possibly count this as a 1, 2 down there. Then here as a wave 3 to the upside, yeah, as an A, B, C. This could be a wave 4, okay. And then, okay, then it makes sense because the wave 5, as I said to you, had only 3 waves. So let's go with this. Okay, I think this is actually the best count we've got. 5 waves to the upside in a leading diagonal. What's the problem with that? A problem is a diagonal is not an impulse. What does that mean? That means if you have only a diagonal pattern as a first wave, because in a bullish interpretation, this would be a wave 1, yeah? And then we would now come down in a wave 2. Things like that, yeah, and it would subdivide higher. Now, the problem with that structure is that with a diagonal, as I have just shown you, it could easily just be an ABC structure. So you don't know, was it just a corrective pattern or was it something bullish, okay? Which means diagonal patterns always need proof. They always need proof. They need to prove themselves. What does that mean? That means they need to show us that they can hold a wave 2. With a diagonal, whenever you get that and you understand it from a structural point of view, it's a diagonal. The wave 2 is the moment of truth. When it hits wave 2 support, this is what it needs to hold. And we are now in wave 2 support. So let me just draw that correctly here onto the chart. Which doesn't mean it has to hold here. The point is pretty much the chart needs to show us that it will hold the wave 2 because it's a diagonal that it's produced, and the diagonal is always less reliable. So it's basically a matter of I won't really trust the chart until it shows us that it can hold a wave 2 support area. Now what I'm going to do here is I'm going to change the color of it to orange because I want to highlight this is actually one of the more risky ones, okay? It could turn around here in a wave 3, absolutely, and could then, when it finds support here in a wave 2, rally in the third wave, and this is just a guideline target now. We take the Fibonacci extensions, and let's say we, like the worst case in this sort of bullish scenario, it would rally to 49 cents next. So this is basically now a pullback. Can find support here in this region between 6.14 cents and 13.76. Should turn around there. But again, we won't really, I would be careful with just simply scaling in. I would want to see at least some kind of a reversal signal because as I just showed you, this could just be a corrective move up and we rally down in an impulse. What I have to say though at the moment is that this looks like a nice corrective structure to the downside in a wave 2. It actually fits quite well the idea of a leading diagonal to the upside. Wave 1 was this leading diagonal. It's not a great structure though, so it's not very reliable, but it could work because the move down looks like a wave 1 here, an A wave, here possibly a B wave, and now in a C wave. because this looks like a descending wedge, which often appears in a C wave as a so-called ending diagonal. Like that, yeah. So here you could, for example, wait for a confirmation of a breakout to the upside of this descending wedge. What are ideal targets for such a wedge? So target-wise, in such a pattern, you look for the length of the A wave, you go to the high of the B wave, and you look for the 1-to-1 ratio. That we talk about 7.7 cents. Now, I'm not sure if it really will get there, but it's one additional level to watch out for here in the orange support area. So you've got the first one broken anyway, so the next one will be 10.6 cents, and then you've got 7.75 and then 6.14. But below 6.14, I will lose faith into this chart, yeah? Because then it basically is unable to hold a high probability wave 2. Below that level, a wave 2 would not be invalid, but it would become very unreliable. That would make the entire chart even more unreliable. So I think based on what I've seen here and based on the subwave structure, I would count this as a wave 1, but as a leading diagonal, which again needs proof. And the proof could be given now by coming down into this support area. Now, one more thing to mention here is the time. Obviously, looking at Fibonacci time zones, you would normally say that, just roughly measuring this here, that typically a wave 2 should take around 62 to 100% of the wave 1 length, time-wise. Now, as you can see here, again, the wave 1 started sort of end of November. Yeah, it's sort of December, January, February, right? So pretty long time. And it just feels wrong that here the wave 2 is finished within, let's say, 3 to 4 weeks. I think it should take a bit longer. So what I'm thinking could occur, we need to be prepared for that, is that, yeah, it finishes here an ABC structure. This might not be the wave 2. It might only be a larger A wave in a wave 2. So that we get something like this: A wave, B wave, and then C wave. And if the A wave, highlighted here, I do that in yellow, if the A wave is a 3-wave move, the B wave would normally be quite strong, which means, I mean, I'll have to basically make something up here because I don't have a confirmed low yet for the ABC structure here. But let's say it comes down to 10.6 cents. Then we talk about a resistance here, which could go between 23.5 to 33.3 cents. So when it finds support and rallies in a B wave here with this structure, if it stays at 3 waves, it could get quite a strong B wave that would normally go at least to 23.5 cents and then come down in a C wave. That would also give the C wave enough space to find support here. But that's all based, and that's all the condition here really is, that it does hold the 6.14 cent level. Because below that, it probably will, it has a realistic and very likely chance to make new lows or just continue with a bear market. So that's sort of the best case count I can give you. I can't really give you new all-time high targets. Why is that? The reason is that it's basically a lifetime downtrend. It has never created a previous impulse in its lifetime, so I cannot base a measurement for new all-time highs on anything other than maybe some ideas around market cap, which isn't really reliable. Now, where are we in terms of the overall trend, in terms of, moving averages? So let's add some moving averages to the chart. Don't have any, but let's just add some moving averages. 1, 2, 3. So what we want to do, we want to look at the 20-day, because they can generate some support, but as you can see here, it's dropping quite strongly. 20-day, then we want to have the 50-day. Gonna make the 50 in white. We drop below that as well, and then we've got the 200. I will put that in yellow. So as you can see, we have broken below the 50-day moving average, and the 200 is only down here at 4.3 cents. So yeah, this can come down quite a bit lower, but we're now in the support area. Unfortunately, we dropped out of the wedge to the downside. Now, if that is the case, I gave you targets. I gave you possible targets here for the C wave. Just again here, around about 7.8 cents would be something I'd be watching. A wave, yeah, measurement to the A wave to the high of the B, yeah, so 7.8 cents, and then obviously here the 10.6 cent level first. Yeah, and that's sort of where we are currently with VAI. Downtrend, also acceleration after breaking below the 50-day moving average, breaking out of the pattern. So yeah, this looks at the moment quite bearish. But then you've got here in this area, in the support area, and where we had previous support, probably an additional structural support. So around the area of, yeah, you know, around 10 cents basically. Okay, so be watching here the previous wave 4. Sometimes you get these come down to a previous wave 4 region. Okay, that's my update about the VAI. I hope you liked the update. Thank you very much. Bye-bye.